Hey there, welcome to the part 9 of our online session. In this video, we are going to understand how to analyze the upcoming move of Nifty 50. Now, this is not an intraday concept. This is basically a swing concept or long-term concept. So it is not going to help you in intraday trading, but it will of course help you with your investments of whatever you have, or you can at least do a swing trade based on this concept whenever the metal is hot. So you'll understand how to do it, how to understand it, how to analyze it. And for that, we will have to understand two concepts first. So the first one is VIX, which is also called as India VIX. And the second concept is basically related to option chain data, OI data. So we haven't understood OI and option chain yet, but this is pretty simple because you do not have to understand it just right now. You just have to understand how it performs. So we'll understand PCR later, but we'll just understand the values the output of its values and how to use it. So you currently don't have to completely understand PCR. It's basically called put call ratio. We'll understand that in our option chain session. But right now you just have to understand the values that PCR displays and what values and how to analyze those values. So PCR is basically put call ratio. And now let's head to Nifty chart. Now I want you guys to do research on this as well. That Nifty and VIX chart, if you might have seen, they are completely opposite to each other. Nifty and VIX chart are completely opposite to each other. So here we have a Nifty 50 chart. So let's go back in past and understand how they are completely opposite. So like not 2009, but let's start off from this 2014 or 2016. All right, so here we have our VIX chart. I have marked support and resistance zone on VIX to help you understand how this concept works. So here is a support at 9.5 and there are three resistances starting off with 23, then 30 and then 36. These resistances were built from 2012 and 2010, 2014 levels. So see, as you can see here, these resistances were built from back then. So we are going to use those resistance and support levels to analyze these moves. So okay, let's see this spike over here. So this is what? This is basically 2015, just the start of the September. So let's go to Nifty 50 and see what happens in this period. 2015 before September. So as you can see, this move started, this rise in VIX started from 20th August, 20 August, and then went on to last until 1 week or towards the end of the August. So as you can see here, the moment VIX started to rise, our Nifty started to show a downfall. This is exactly 20 August 2015. This is the day when VIX started to rise, and that is the exact day when Nifty started to fall. And as soon as VIX started to rise more, what happened? Nifty started to fall more. So this is the part where you want to focus. See this, where VIX showed a up move and Nifty showed a down move. What happened after that? VIX cooled down. So when VIX was coming down, Nifty acts exactly opposite. So Nifty started to go up. And then there was consolidation in VIX and there was some downside consolidation types moves in Nifty. So this was basically, if you remember, 2014 period was the election period in India, after which in because of elections the market had ran in anticipation of those elections, and then there was some profit booking done over here. But as you can see later on also, so this spike is irrelevant because this might be a technical glitch that is there. So we have to see where and when did VIX rise and what did happen in that phase to Nifty. So this is again what? This is November 2016. So let's see November 2016. November 2016 May, this VIX rose. This whole month, VIX was trading on the higher side. And see here, we have November. This is the November phase where the Nifty, except for this one candle, which I don't know what happened over here because I was not very active in all sorts of things in 2016. I was there, but I did not know what this was about. I do not remember clearly. But if you ignore this particular candle, as you can see there, this candle might be this VIX rejection. So if you ignore that, the VIX was up for this whole month and then the Nifty was down for this whole month. So you have to understand the fact that Nifty and VIX are completely opposite things. So when VIX is going up, Nifty will come down, and when Nifty is going up, VIX will come down. So let's see, this 23 level resistance has been a good resistance since 2010. Let's see how markets react to this when VIX again reclaims this 23 level. So let's see when VIX reclaims this level. Okay, coming near. VIX reclaims this level on February 2018. Let's see what happened in February 2018. Boom. Can see that? This is February. See over here. VIX started to rise from January 2018 and it completely showed a up move towards 23 levels in February. So what happened to Nifty? Nifty fell. And this is what exactly you can take advantage of when taking any swing trades or making investment decisions. So when you are making investment decisions, if you see the VIX is high, you know that you do not have to invest in markets right now because the markets can potentially take a hit. When do you have to invest? When you have to invest when VIX is on the lower side, because when the VIX is on the lower side, it means the market will keep going higher. Until the VIX is not going higher, you can stay chill and calm. And the moment VIX start to rise, you have to be cautious. So let's see what happened again. It could not break above 23. It came down, and because it came down, market started to go up again. Let's see again when it reclaims this 23 level and then what was the reaction from the market. So this is October to November phase of 2018. Let's see what happened in October to November phase of 2018. If you can see clearly, this is October, this is November phase. Boom. They work exactly opposite of each other. And this is the thing which no one is going to tell you on YouTube because these things are not experienced by those YouTube or fake scamsters who are trying to sell you courses just by showing you profits or everything. This course I'm making because it is not my primary income, of course, but passive income is also good. And the knowledge I have, I also want to share the knowledge. But what happens is when we give knowledge for free, people don't value it. So I want to keep it uh, chargeable, but also I want to keep it very budget friendly. So that is why this course is there. But this knowledge will not be available to you anywhere. Like no one is going to tell you all these things. It's all experience and observation that I combine into all these courses and try to give you. So let's see again what happens when the VIX chart. See the VIX touched 23 again and started to cool down again. So this is a very big symbol that 23 level for VIX is a very big resistance. So whenever in future VIX breaks 23, it is not going to stop because it has rejected of 23 so many times. The resistance is so stiff now that if it breaks above 23, it won't be stopping anytime soon. So that means the VIX will shoot up above 23 and that is when the markets will come down. So this is where it shot up about 23. What was the time? It was April of 2019. Let's go April of 2019. Okay, it's short, and then April, mid-April to mid-May. So this was the zone, mid-April to mid-May. All right. So again, you see the charts are going exactly inverse to each other. Then what happened? Then it cooled down and came down in a insanely fast manner. So the VIX uh, touched its second resistance at 30 and it could not sustain above 30. It just broke down again. And as the VIX broke down, what happened to Nifty? Nifty started its up move again. So this up move was because of that insane VIX cool down. then it just cooled off. And now here is where you have to focus, that whenever VIX takes a support, now if you see over here, these two candles, or uh, all all these candles which are taking support at this 9.5 levels, you have to be cautious that whenever VIX takes a support, it is going to make a rise. And whenever VIX rises, you have to understand Nifty can fall. So this is mid-July 2019. Let's see what happens mid-July 2019. Bang. VIX clearly was showing an indication of support over here. And then as soon as it started to rise, Nifty fell. So you can really take help of these things when making investment decisions or making swing trades. It is going to help you a lot. And then the best part of this VIX, uh, VIX Nifty funda came in 2020. This was our fall, but before the fall came, this particular thing had completely told that Nifty is going to fall, because the resistance of 23 was sustained at the end of February itself. At the end of February, meaning somewhere over here, the VIX had shown sustenance about 23, and as we saw, 23 was a very strong level. So anything, any close about 23 or any sustenance of VIX about 23 was going to bring some insanely heavy up move for VIX, which means a good down move for Nifty. And then in few days, it went above 30, and in just a couple of days, it went above 36. So this was a clear indication that Nifty was going to fall. And what happened then? The VIX went up, the Nifty went down. Completely opposite charts. And then the VIX was at 80. All right. So this does not necessarily mean that it is going to fall, or uh, uh, because just because it fell over here, it does not necessarily mean it will fall. It can rise, but VIX at 80 was not, people did not think this was possible. People did not think this was possible because the all-time high of VIX was somewhere around 60, and 60 ka VIX was considered to be insane. But this fall was something else. It went on to 80 levels. Now there are two investment opportunities as we talk. In the first phase of this video, I told you that do not invest when the VIX is on the higher side, meaning this is extremely high. I meant the higher side, by the which I meant was these levels, 25, 30, because that is where uh, it can show some more up move, and then the market might fall like this. But whenever VIX is on such high levels, which means the market is available at cheap rates, dirt cheap rates, that is the point where you have to invest at a higher levels, meaning you have to put in more money than usual. Like VIX at 65, 70, 80. No, I don't know when we are going to look at VIX at that side now. But whenever you get an opportunity, whenever there's some war or whenever there's some situation that's very pessimistic for the country, VIX is going to rise and markets are going to tank. So don't invest when the VIX is around 20 to 30 levels, because that indicates that it might shoot more and then it might fall. The markets might fall. So you have to invest either when the VIX are lying low, when the markets are making new all-time high, and take the advantage of the momentum that is there, or either when the VIX is way too high and the markets are available at dirt cheap price. So what happened after that? This particular pattern, as we see over here, this rejection came, complete rejection. And now there are two things over here. There was this rejection pattern from on daily basis, plus there was volume rejection. So we have understood the concept of volume rejection, and this was the volume rejection. So at VIX 70, it was indicating that VIX might fall and Nifty might come to a rise. And that is exactly what happened. VIX cooled off, and then the Nifty has been constantly going higher and higher, breaking previous all-time high and making new all-time high every second day. So what now? Now if you see, the wicks are the wicks basically levels, the levels of wicks are at a lower side, at a lower side. So until and unless they're at least achieving the levels of 23, I do not see any down move in market, because just because the market reached 17,000, people are so pessimistic that it's going to fall, it's going to fall. So many people have held puts, so many people have shorted markets, but that is not the right way, because VIX is lying low. There's no sign of rise in VIX. Now, as you can anticipate, this might show some kind of rise, like uh, the rise is starting kind of thing, you can say. But who knows? This might not even rise. This might just be a false trap for people who know this analysis. And instead of going this way, it can actually just go do time pass and then come down. So we do not know as of now the VIX are going to rise or not. But if the VIX rises and goes above 23, that is where you have to be cautious. Not until then, you do not have to be negative or pessimistic about Nifty, because it has not even touched its support yet. So there is a high possibility that VIX might come down and touch this support, and then after taking support over here, then it may rise. There is a high possibility of that as well. So until and unless VIX is pretty cooled off, you do not need to worry about Nifty. The moment VIX started to rise, boom, 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 the moment VIX starts to rise, that is where you have to be very much cautious. Now we understood VIX and Nifty, but why PCR? Why? I told you about PCR, right? Why? There was no name of PCR in this whole analysis. But this is to just to give us an additional context. Meaning, let's understand how. For now, just you just have to understand that high PCR value basically means bearish for market. Okay, and low PCR value basically means bullish for market. You just have to understand this. We'll explain this later in option chain concepts. But high PCR is bearish, low PCR is bullish, and neutral PCR is neutral. Neutral PCR is neutral. So what are these values? How are we going to decide what is high, what is low, what is neutral? So let me give you those values. Let me hand you those values. So bearish PCR is basically anything between 1.7 or high. 1.7 or high. Low PCR is basically 0.3 to 0.5. So let's say 1.72, high PCR is basically 1.7 to let's say 1.9 also is high PCR. Okay, then 0.3 to zero point 0.5 is bullish, which is low PCR, and then neutral PCR is 1. So zero point 0.9 to 1.1. So 0.9 to 1.1 is neutral PCR. Now, when the PCR is neutral, it does not indicate anything. You only have to look at PCR when it's high or low. So when the PCR is neutral, you just have to ignore PCR and look what VIX is telling. So now the PCR is neutral, VIX is pretty much lying low. So is there any point to short markets right now or expect any down move? Like right now, there is no point. Yeah, there might be some profit booking over here, and then it might rise again, but there is not going to be a downfall as of now in markets. All right, understand that. So now, what happens to these levels, you might ask? So we have considered these levels 1.7 to 1.9, 0.3 to 0.5. So what happens to levels between these? Right. So anything between 1.1 to 1.7, because 1.1 is neutral and to the higher side until 1.7 is reached, it's slightly bearish. Slightly bearish. 1.7 to 1.9 is highly bearish. 1.1 to 1.7 slightly bearish, 1.7 to 1.9 highly bearish, and then zero point 0.5 ahead of 0.5 to 0.5 to 0.9, because that is where the neutral zone starts, is again slightly bullish. SLIGH slightly bullish, and 0.9 to 1.1 is neutral. So let's check the value of PCR now. How do you check the value of PCR? For that, you have to just put on Google uh, Nifty put call ratio, and then you have to choose this any particular link that opens up. I use Nifty Trader for that matter because this guy or this website is pretty accurate. Or you can even use Cons app if you have the subscription, premium subscription. It needs premium subscription for Concept to display PCR, but Nifty Trader is free. So right now, as you can see, the PCR is 1.1. PCR is 1.1, which is our neutral zone. So PCR is pretty much neutral for right now. Current market's PCR is pretty much neutral. All right. So neutral PCR, low VIX. Why are you expecting a down move? Let me clear that. Do not expect a down move when the VIX is low and PCR is just neutral. You should expect a down move when VIX is rising and your PCR is at least above 1.5. Okay, not 1.7 directly because that would clearly mean a down move is coming, but at least needs to be above 1.5. So it needs to be bearish. The PCR needs to be bearish. The VIX needs to be rising. And that is exactly why you should expect a down move. For right now, it is just not happening anything. Now, let me tell you that when this move came, this Corona fall came, our VIX completely broke its all resistance and our PCR was above 1.7. This at the start of this phase before the fall came, the markets were at 12,000, levels, and at this point, our VIX was breaking resistances and PCR was high as 1.7, 1.8. This is the point where you need to understand, hey, the market is going to just fall more. The fall began, and oh boy, how the way it fell, just it blew off everyone. So I hope you're understanding the concept. If you have any doubts, just feel free to watch this video again because it will really help you while making investment decisions. You will not need any financial advisor once you understand this concept. All right. So in next video, we are going to understand open interest and option chain analysis. It is again going to be a very important session because once you understand how to read option chain data, you can analyze stocks and index in a much better way. So I will see you in the next session. Until then, if you have any doubts, ping me on Telegram. My ID is with you and I will answer you if you have any doubts with that. So I will see you in the next one. Bye bye. Take care.